Hey everybody, it's Hussein Kabani, your favorite broker. And guess what, guys? I'm gonna share with you guys what I actually do as investments. There is a time where I think you can buy resale, and there's a time where I think you can buy new construction. You get the right opportunity, you gotta kind of jump on it, but this is the way I evaluate it as an investor. Basically, what's going on right now, we're in February 2021, and the market is still pretty crazy. So what we're experiencing right now is a strong seller's market. So it's very hard for a buyer, an investor buyer, to go out there and legitimately buy something that you think that you're actually going to be profitable on, because there's so many buyers out there buying as end users. The prices are so high, like they're gonna end up living in this property. It's worth it for them. I truly believe in buying real estate for the long run. It's worth it for them. I think it's great. As an investor, where I'm looking at it and saying, hey, the numbers have to make sense to me, there aren't a lot of resale deals out there that make sense to me as an investor right now. This is what I actually run across, is a lot of questions about, should I buy new or should I buy resale? I'm gonna try to cover this and tell you guys about an investment that I made at the same time. In this market right now, where it's a very hot market, I would say that if you are an end user, meaning that you're going to move into the property, I prefer to buy resale right now. And the reason that is because you're going to be able to buy the property at the price right now. There's a couple of qualifying factors that I like to tell my clients about. Some of these qualifying factors is that you got to like the location. You got to basically be happy about the house that you're purchasing. You got to look at the overall payments every month and say, hey, does this payment make sense for me, whether the market is up or down? Does the payment make sense? And do I have job security? And the other thing also is that how long do you plan on living in the property? I'm not a huge fan of people speculating on real estate and saying, hey, in 1 year or 2 years, it's going to go up. I'm going to make a boatload of money because the market is hot. It could happen. And I've seen it happen. I've experienced those type of gains. This is not, in my opinion, a smart way of investing in real estate. I look at real estate as a long-term investment. If you have these qualifying factors where you're like, hey, location is good, I like the house, I can meet the budget, and I'm gonna be here for a long run. And I can say that's 5 to 7 years, 10 years. If you can see yourself and your family being there for that amount of time, I'd say go and buy it. And I think resale makes a lot of sense for the most part right now, because what's gonna happen is you're gonna be able to qualify it on right now. The appraisal hopefully should make some kind of sense right now, or you should be able to close that gap. You know, you're in the door right now, you're closed and you're finished. My problem right now with most builders is this. The prices right now that they're offering this new construction for is really high. It doesn't make sense in the marketplace. When I look at new construction pricing, and I don't want to call out these builders, if you guys want to contact me and talk to me about it, I don't mind sharing it with you. And they're good builders, don't get me wrong. I just don't agree with how the pricing is set up. If you look at their pricing right now and compare it back to the market of what is selling right now, it's higher. And I don't like that because, you know, I'm not sure of what's going to happen in the next 18 months, 24 months when you have to go close on that property. What I do remember is from 2017, where people were lining up and buying these houses for crazy amount of money from new home builders. They were paying ridiculous amount of money. It didn't even make sense to the market. And then guess what happened in April 2017? The market came down. These houses were ready to occupy at the end of 2018, at the beginning of 19, and those prices still haven't got to where they were supposed to be because they weren't worth what you paid for it at that time. So that's why I'm very skeptical about buying new home construction in a heated market where you cannot prove what the comparable sales are right now. It's not always the case, and I will mention this builder because I am a huge fan of them actually. You may not be, but I am. And it's Mattamy Homes. I think Mattamy Homes is an awesome builder. Their pricing when they release is always very, 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 very fair. The reason I'm sharing this is because I was fortunate enough to be able to buy a townhouse that they released in the new Whiteville community of Pickering. And it's a north community, north of Taunton Road. Basically what ends up happening is that they're releasing townhomes. They released townhomes. They were back-to-back townhouses. I've bought this similar type of townhouse back in 2015 for about $340,000. And their starting price now is $620,000. Here's the deal, guys. If I saw this house on the market today, it's worth $620,000 or $650,000. I think that's roughly what it's worth right now. And I'm able to buy it for $620,000. My mindset is that I want this house. It's going to be a long-term investment, whether I live in it or it's going to be a long-term investment. I'm okay with it because I can see the market today and it's a fair market value and maybe even slightly less than what it would trade for today. So that's where I saw a good value in it. I don't know the numbers off by heart, so I'm going to look at my screen and I'm going to go through them. So overall, in the next 4 months, I have to give them about an $80,000 deposit in total for this. My purchase details, I'm going to be very transparent with you guys because I am to all of my clients and all the people that I want, because I want everyone to succeed at the end of the day. Purchase purchase price on this one is about $620,000. When I factor in our upgrades that we might add in, land transfer tax, lawyer fees, builder closing costs, and appliances, I always err on a higher side, okay? So I even have baked in here, my builder cost is gonna be $5,000 to close. I think it's gonna be less. My appliances, $5,000. I think it's gonna be less. I rather work on a higher number. So in total, I'm thinking that this property is gonna cost me somewhere around $646,000 by the time I close on it. So my purchase price, my total cost of this property is gonna be $646,000. Now, right now, the cash I need to close on this property is not just the $80,000 that I've put down. I'm gonna have to put a 20% down payment on this property because it's not my only property. I'm gonna have to basically put almost $124,000 down payment on this property. And now when I factor in my closing costs and my appliances, which I noted to you guys is already higher, is about $26,000. In total, I'm gonna need about $150,000 to close on this property. My deposit is gonna be $80,000 in the next 4 months. That means when it comes to closing in the next 18 to 24 months, it's variable. I'm gonna need another $70,000 to close this transaction. I told you guys this is an investment property for me, so I break down the numbers as an investment, okay? So that's my cost of acquisition. When you see the 620 number, it's not actually what it's costing me. It's actually costing me almost $650,000 to close on this transaction, okay? Beyond that, guys, I have to look at what I'm gonna be able to rent this property out for monthly. I gotta take a forecast. Nobody has a crystal ball and know where it's gonna go, but I gotta look at it in the resale market today, in the rental market today, and make some projections, because that's what investors do. What I'm looking at is that I'm probably gonna be able to get a 2% interest rate on this at 30 years amortization. So this property on a monthly basis is gonna cost me about $1,831 a month on my mortgage. I'm thinking insurance is gonna be $50, property tax is gonna be $420. I'm at about $2,300 a month to pay for this property. That's what it's gonna cost me. I feel like I'm gonna be able to rent it out for $2,500. I shouldn't say feel like. I'm looking at the market right now and I'm looking at what the market rates are right now, and I'm basically making an estimate. So I estimate that I can rent this property out for $2,500 a month. My cost is $23. It's $200 a month positive cash flow. Well, guys, you're not gonna get rich on $200 a month positive cash flow, but it's better than paying out of your pocket. This deal already starts to make sense to me. I said, as an investor, you have to be able to make some type of projections and take some kind of risk. No risk, no reward. What my projections are is this. I believe, and I could be wrong, and I'm not tied to this at the end of the day as an investor. If the property goes down a little bit, I'm okay with it because I'm never gonna sell it. That's my intention. I'm never gonna sell it. There's something different I'm gonna do to leverage this property to move forward. This is a different conversation that we can have. You can contact me. We can have this conversation about leveraging properties, no problem. What I feel like is that this property, when I go to close this property, is gonna be worth at least $750,000. So I'm already up. I feel like my mortgage balance on this property is gonna be somewhere around $496,000. My down payment was about $124,000. Total closing cost was almost $26,000. I look at the overall picture of what I have paid into it. You can basically say I will have an equity of about $254,000 equity. You've contributed in this to get to your equity. So my net gain on this property, I would say, is going to be about $104,000. That's going to be my net gain on the day of closing. This is how I kind of evaluate the investments that I make. I felt that resale was a better way to go. The other reason I felt personally for me the better way to go right now on resale is that the other moving pieces I personally have, I can't really get the mortgage for this right now. The moving pieces that I have right now, I know I'm going to be able to sell them by that time, hopefully. And then at that point, I'll be able to get a mortgage, but I do get to lock into something at the price point that I'm comfortable with today. Hey guys, so that was just some information on a property that I bought in 2021, at the beginning of 2021. I'm sure I'll probably do an update with you guys and closer to end of 2022 or 2023 and let you know how this shapes up. Hopefully I do better than what my projections are, but I feel like my projections are pretty conservative. If you guys have any questions about my logic and how I am doing what I'm doing right now, I'd be more than happy to set up a Zoom call and talk to you guys about it. Share this video, like it, and most importantly, leave me your comments. I'm really interested in knowing what you guys think about this video and what your investment strategy is as well. Until next time, guys, remember one thing, get Cabani, get sold.
Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.